Dow now up 160, and if you take into account the action in futures last night, 600-point swing in the Dow.
Yeah, it's certainly big, but I think it is initially. I think what you had was a lot of algorithmic trading overnight. They saw the headlines, Iran attack, whatever, and the response was clearly disproportional. As more details came out, when it looked like there were going to be limited and maybe even no casualties, and thankfully it was no casualties, that gave people a sense that, wait, this confrontation may be rather limited, and the markets liked that a great deal. Oil came back down. Gold, which had soared, came back down. And now, as the president has, to some degree, diffused some of the anxiety, so you're getting, as Morgan alluded to, you're getting a little bit of a sigh-of-relief rally here. The fact that this confrontation does not look like it's going to heat up again, we'll cross our fingers and hope that. And that's pretty much where we are. Now we'll look at going back to some of the actual data. The 1030 release on crude inventory showed a massive build in products, particularly gasoline. It may be, it's hard, I don't have the data in front of me, but by my recollection, this may be one of the largest accumulations of gasoline at this time of year that I can recall. So that may put further pressure on oil. And so if the geopolitical tensions ease back, the market could have a little bit of a move.
Yeah, I think that's a key point, Art, also because, I mean, we have had some data in recent days that's been overshadowed by all of these tensions flaring with Iran, whether it's the ISM manufacturing number for December, that was the lowest read in 10 years. Numbers yesterday that came in below estimates as well. Is this something that the market needs to take a closer look at, especially as we go into another jobs report?
Well, if the geopolitical situation is going to calm down, we're going to get in there. You're going to be hearing more about what are the earnings outlooks as we move along in the year. We're at record highs. Can we get earnings to justify that? Right now, they look like they will not be much change from last year. So we're going to need some help on that front.
Yeah, we're showing charts right now, 24-hour charts of the Dow and now a 24-hour chart of the S&P 500, which really sort of tells the story in terms of the volatility we've seen as these strikes have played out and the aftermath, the commentary, the rhetoric, including those comments just a few moments ago from President Trump. Art, the VIX, the volatility index, as we've been speaking, has slipped below 13 as well. Yeah,
it's amazing. Actually, even in the middle of all the tensions, the VIX never truly spiked. And, we're getting to some kind of perhaps new normal here where the VIX is not only below 15, but as you point out, below 13, maybe headed below 12. And that may hint that maybe investors are a little too relaxed and unconcerned. But for now, I think it is a good thermometer for what we're seeing.
Well, speaking of being relaxed, this is an S&P all-time high now, a record high, Art.
Wow.
After the events of last night, how much of this is complacency? Or how much of it is a reflection of the durability of the economy, about employment?
Well, I think it is. I think, not to put politics too far into it, but if the president made the move that he made, which was dramatic, and he has managed to get past it without any big negatives, that might enhance his chances for re-election, which for now the market likes. They think he's good for business as opposed to some of the other proposals, the socialist-type proposals that they've seen. So that's in there. Is there some sign of complacency? Yes. But, you can sit here and reason through the market's action so far, and it makes sense. And the abnormality of the sell-off, as I said, it looked like it was mostly algorithmic. So the two-legged humans are more relaxed than the machines are.
What do you make of some of the early prints we've been getting in terms of earnings season? I mean, Walgreens right now, it's down 6%.
Yeah, Walgreens was a bit of a shock. I think people are looking for very small changes in earnings, hopefully a little bit better, as I say. here we are at record highs. We can't have deteriorating earnings come by and support that. So while geopolitics remains in the forefront, we're going to have the economy kick in and do better. And the Fed, God love them, don't call it QE, but they're shoveling money in a very high fashion, even bigger than when they were doing QE.
So then what is left on the plate to digest? We're going to start getting earnings next week. We're going to get the Chinese, we think, signing this text. We don't know how specific it'll be. What does the market want more? Great commentary out of corporates or some specificity on China?
I think they will look to China and hope to get specificity. Let's not forget that as we approach the end of the month, Brexit will be coming back in. So we'll have that, and then we'll be moving quickly into the Iowa caucuses. And, that the election has not been a factor for the market yet because it has no idea who the Democratic nominee may be. The more data that we get as we move along, we get past early March when we have Super Tuesday. Those things will become important then. As Jeff Gundlach said last night, if Bernie Sanders begins to look like a very viable candidate, and so far he does, the market may need to come to terms with that. So the election will be a factor, but we've got to move past some of the early looks.